Welcome everybody to today's live stream. This is Exploring Crypto. My name is Harry. We are a brand new channel, and like all that are just starting out, we need your help. We need your support. So first thing I'm going to do is I'm going to ask, can you please hit that like button, hit that subscribe button, help us grow this channel. We're going to be putting out content, well, maybe not every day to start off with, but certainly a couple of times a week. It's going to be a mix between live TA and news, as well as research into tokens. But what we'll do is we'll expand that as we go forward, and everything just gets a little bit slicker. But for now, just hit the like button, hit the subscribe. That's going to really help. So today, what are we going to talk about? Well, I think really we're going to start with the price. BTC has taken a nice, well, depends how you look at it, but certainly taken a tumble overnight. There's rumors as to how that's come about, why that has happened. And we're going to try and explore some of those, try and have an understanding of where we are. Is this just the start? Was it just a necessary pullback before we climb further? We're going to have a look at that as well. So today in the news section, we're going to cover Silvergate. We're going to have a look at what Silvergate is, what the problems have been, and how that is impacting on the market. We're going to look at some other factors as well, because I think it's fair to say that 2023 has started off very well for crypto, certainly for Bitcoin. But are we now starting to run into some headwinds? We've had quite a bit of FUD that's been coming out over the last few weeks and months relating to Binance and BUSD. We've had issues with regulations. We've also got the macroeconomic picture. We've got sticky inflation. Job reports keep on coming in hot. Interest rates, although still climbing, are not taking the impact that we would like to see in bringing inflation down to a controlled level. We've also got things such as Mt. Gox. Now, this one's sort of slipping under the radar, but Mt. Gox payments are going to start happening from this month onwards. What might that do to the price of Bitcoin and cryptocurrency? And then we can also have a look at Ethereum, because we've got the Shanghai fork coming up. Shanghai fork is going to allow us to unstake any Ethereum we've been staking. Again, is that another cause for a sell-off? So we'll have a look at that. We'll see how these headwinds may actually be slowing down the progression that BTC has had and what that might do to the price. So without any further ado, let's just dive in. Okay, so what we've got at the moment, I've got so many screens open. I'm just minimizing them all, so just bear with me a second. So I've got to get these out of the right way. There we go. We're just going to have a look at the BTC price at the moment. I've actually broken it down onto the hourly chart. And the reason I've done that is I just wanted to show you where the activity took over the night. I'm based in the UK, and so for me, I woke up to sort of $1,000 fall this morning, around about 5%. And actually, what you can see on this chart here, and I'll just explain it for those of you that haven't seen it like this. I've hidden some indicators. Ignore the volume down at the bottom with the different colored bars. We're not necessarily interested in that. The reason I brought this one up here is it's these dots along the top, and they're actually quite interesting. And this is market sessions. And when we talk about market sessions, I've only got 3 that are on my chart. I've effectively got Asia, which are the green dots. I've got London, which are the yellow, and I've got New York, which are the red. And depending on what narrative you subscribe to and how you view the markets, understanding market sessions can be a real key indicator in how price is going to move and how we might be setting up to do certain activities. And what I'd like to say is, yesterday, a lot of news came out about Silvergate, and the most of that happened as Asia had closed. Now, we kind of just moved sideways through London and New York, but you can see the moment that Asia opened, this green dot here, we just instantly fell away from the price. And it's interesting to see that it was Asia that actually moved us. But it's what's going to happen now, because we now need to try and understand, is the narrative in place that we're going to keep on falling, or are we actually going to find an opportunity for a retest before further falling, or actually just recovering that candle? And that's why I want to have a look at a few other charts and indicators. We'll come back and have a look at chart structure and everything else after we've talked about some of the news events. But it's just interesting. I just want to get it in your mind straight away that when this price action fell off and how quick and sudden it happened, and then what price has done since then. But we can see, if I just get the initial fall was about 6%. It recovered the candle to around about 5%. And then since then, we've effectively just moved sideways for about the last 7 or 8 hours. What we'll do is we'll move over to high block capital. Now, some of you may not be aware what high block capital is, and that you might look at a chart like this and just be completely lost in where we are. So a real quick tour around what it is and what you can actually see on the chart at the moment. But effectively, this is showing areas of liquidation levels. Now, I have mine set, you can see up here, to give me information from BitMEX, from Bybit, and from Binance. So 3 of the biggest derivatives trading platforms that are out there at the moment for BTC. You can see that my ticker is for BTC, although you can also do this for Ethereum. And the look back, this is an interesting thing that you can play around with to give you sort of a short time narrative or a much longer narrative. And these levels that we're going to be printing on the chart below do change as you move through the different timescales. But I'm just going to keep it on the 7-day at the moment, just because the 12-hour doesn't really paint the picture of the fall, because it happened, probably about 10 hours ago, and I wanted to see the build-up prior to that. Then we can have a look at the chart itself, and what you've got here is you've got these scores of sort of blues to greens to yellows across a purple background, and there's a key down here that indicates what that is. So if you're in the deep purple, there's effectively 0. Liquidation levels at that price, and then as they build up, the colors start to change, and then we get into sort of the reds, and we get the yellows, and we're 5 billion plus. Again, changing the time scale on that will change the scale on the left hand side. So if you are using this for the first time, just bear that one in mind. But the reason I bring this up is, for those of you that aren't aware of it, this is, in my opinion, a cheat sheet for any trading that you may be looking at to do. Now, it's not going to guarantee which way price is going to move. However, it is going to give you some key levels that you can look to either make entries or take profits in trades, and also where you may want to look to set any stop losses to counter any movement there. And why do I say that? Well, we can see here we've got a simple candles structure in the green and the reds just moving across the center of the chart. What we can actually see is these colorings from the keys, these liquidation levels, are starting to build up. And what is interesting is price always seems to head towards them. It's like a magnet. And this is because, in my opinion, market makers are using this data to move the price towards these areas of liquidations, because that is how they can make money from that. And I don't want to dive into how that works in this session, because I'm going to try and keep this one to under 30 minutes. But the fact of the matter is that this is giving key levels for market makers to try and drive the price towards, so that they can then effectively take the opposite side of those and take the money out of any of the sucker retailers that have tried to do the opposite. And it is true that this happens, and we can have a look at this, even if we go back to the 1st of March. Now, it's a bit frustrating when I hold my cursor over here, because unfortunately it hides all the data over it. But at the moment, I'm down the 1st of March here, and we can see that price was meandering along. Each one of these bars, I think, is around about 5 minutes. And it starts to take out these low levels of liquidations here. And you can kind of see, once it hits that level, it clears it to the right-hand side, because there's nothing there to go. But as it was doing that, we could start to see that north of that price, levels were starting to build up, because we were going from light blues into the greens and then towards the yellows. So what did price magically do? It magically reversed, took out this level here. And the reason they started building up is because price was starting to move down. So the market, as sucker retailers, started getting excited. We started placing shorts, which meant our liquidation levels were above where price action was. Market maker just reverses the price, finds a level which has a significant amount of liquidation levels. So this one here at 23,950 at 20 to 9 in the morning on the 1st of March had $3.7 billion worth of liquidation. They drove, oops, apologies there. Have to reset that one. Sadly, I didn't have this blue piece already and able to add everything on, but we can quickly just bring that chart back up. Or maybe not so quickly. Okay, there we go. I'll tell you what, I'm just going to leave it like that for now, because we can still get the price. But you can see it brought the price up, immediately took that out, and then started to reverse back down. Now, that was a 5-minute explanation to get to the point of what I actually wanted to talk about. with the Asia move that happened this morning. Yesterday, we just effectively saw price action just crabbing along, moving up and down in and around sort of $100 to $200 range. And what we could see is there was a bit of indecision in the market. So we had longs and shorts building up either side because the price was moving sideways for so long. But the market maker needs to get paid at some stage. And so he made a decision of which way he wanted to go. And you can see, I mean, we'll have to do some very quick maths as we scroll down. But even as we do, each of these levels, we're talking in the billions as I'm moving down. You can see it changing. But I bet you by the time we get to the bottom, we're probably talking anywhere around $20 to $25 billion worth of long liquidations. Price moving down is going to liquidate long positions. Whilst if we move in the other direction, we were probably just about 20 billion, so still fairly even. But what do? We moved it right back down. In this instance, actually, we burst all the way back through. So we totally cleaned that out into the dark purple area, and then we started to recover it and move price sideways. And now it's a question of, well, where do we go? And the interesting factor is, again, we've got that cheat sheet because people might suggest that the next logical move will be for it to just continue down. And whilst that can't be ruled out, we'll have a look at that and say that around about 21.150, we've got nearly $4.5 billion worth of liquidation levels. So if we do move south, that's the level that I would be looking at. That's where I'd be looking to set my take profit zone in and around there. But if we look to move north, the area that I'd seriously be interested in would be a retest of 24K. Now, again, I really am going into the detail of this when I said that I wouldn't. Sorry, I lost my train of thought there. You shouldn't just use this on its own. You really need to use this to work with whatever technical analysis it is that you're producing. And then you can use the chart like high block to understand levels that you can either take those entries or take the profit zones. That's what you want to do. But I would put a bet, and if we do go north and we do look to retest this area, 24,000 to around about 24,250 is certainly an appealing area up there. There's lots of shorts at the moment being built there off the back of that fall. And it is just like market makers to just move that and take that liquidity. They don't care about the price. They just care where the money is. And that's where they're going to look at. I've kind of spent a bit of time on high block there. We may come back to that a little bit later on when we have a look at price action at the moment. We'll actually get some TA involved and then see which one we're favoring. But I want to now dive into the news. And we're going to start with Silvergate. That's the whole point of today. That was the biggest news article that's come out this week. Bitcoin sinks to 2-week low as Silvergate fallout hurts crypto. So there could be a lot of you on this stream or watching this a bit later on to go, I've never even heard of Silvergate. Who are they and what do they do? Well, effectively, Silvergate is a US-based crypto-friendly bank that provides liquidity to some of the largest players in the markets. Now, when I start listening like Coinbase, Kraken, we've got FTX when they were around, you can see that they were no small player within this. And what's happened is when FTX collapsed back end of last year, there was a significant run. One on FTX with everyone trying to get out, but also on Silvergate itself. And we'll have a look at the stock price itself. And they've never really been able to recover from that. When we look at the stock price, you can see how that has perpetuated all the way through. I mean, it wasn't great for anything crypto related in 2022 anyway, because of the extended bear market we were in. But we've now got to a point where Silvergate have financial obligations, and they have some financial obligations on the 16th of March, which is highly expected and rumored that they won't be able to meet. And so suddenly over the last few days, this narrative has started to come out that they are in a significant amount of trouble. The stock market has started to dump even further than it has. I mean, it's already at about a 95% low, but the speed in which the last couple of percent has happened has been rather fast. Then we take on top of that a host of crypto firms, including Coinbase, Paxos, Galaxy, Kraken, and a few others. Yesterday announced that they were going to stop using Silvergate as their bank. Some of them were moving towards Signature Bank, others I'm not necessarily too sure. But this compounded the problems that they were having yesterday, further impacting the price. And when we have a look at the stock price, you'll see how badly they've fallen. Matter of fact, it's probably best we just jump onto that now. So this is the Silvergate stock price. And it's crazy to think, but, back at the height of the bull run, November, December 2021, we were talking about $240 a share. $240 a share. And we are currently trading at $5.72. The market is closed at the moment. It will be opening in a few hours. It'll be interesting to see what happened. But yesterday alone, Wednesday, we closed at $13. And by the time we closed yesterday, we were down at $5. So an incredible fall off there. You can tell how severe it was just by the gap that's been created in the market. And whilst, some people will believe that gaps are there to be filled, I think the writing's kind of on the wall on this one. People do seem to be jumping ship. There is a loss of loss of trust at the moment. The narrative of them not being able to fulfill their financial obligations is just going to compound the fact that people just don't trust using them. And if we don't have trust, particularly off the back of 2022, people are going to move on. So that has obviously had an impact. Silvergate used to provide, I have to use the word used to because so many people have jumped ship, so much liquidity in the market. We can't underestimate the impact that's going to have. And if we're really talking about market makers and large financial institutions really driving where the price of BTC is going to go, if they don't have access to those funds to be able to do that, does it still hold its value that we currently see? Well, the market is suggestion from last night that potentially not. Now, they haven't gone under yet, and it might just be a case of, sell the rumor in this case instead of buy the rumor. Sell the rumor, buy the news, and we actually wait till they go under. When they go under, everyone expects an even further dump, but actually the market might have already priced it in. So we might be seeing that narrative at the moment, and we'll know where we are with that in a couple of weeks' time. But it's not the only negative news that's been coming out. And this is what I want to talk about with this headwind. You look at any sentiment on crypto, Twitter, or YouTube, and the sentiment has certainly shifted. People have started to really buy into that we've turned that corner, the recovery's coming, we're not going to get into recession, inflation's under control, and everything's looking good. And that is, for me, a very worrying time because, max pain, it always occurs in the least direction you think it's going to be. So if the narrative is suddenly moved to bullish, there's still part of me that thinks there might very well be a very bearish sentiment around there. And we only have to look at some of the news that's come out. So we'll start with Binance, and the amount of news that's come out with Binance over the last few weeks has been incredible. I'll start with the stuff from earlier on in February. And we know that Paxos had to stop the minting of BUSD following regulatory action from the New York Department of Financial Services and the SEC. They've effectively said that they cannot continue to use BUSD. Now, just very quickly, it doesn't mean that BUSD is disappearing anytime soon. Paxos will continue to honor that for the moment until the 24th of February 2024. So you'll still be able to get a one-to-one swap, which is why we didn't see the immediate depegging of BUSD. However, we are starting to see larger firms such as Coinbase who are starting to delist BUSD. They're going to stop the trading from that. And they're citing liquidity concerns. They, one, don't think that there's necessarily demand for it. Two, as we'll see in a moment, the amount of circulating supply for BUSD is dropping significantly. We're seeing large wallets moving BUSD over to a place like Paxos, converting it into Tether or cash, and then that BUSD no longer be circulating within the market. And all we need to do is have a look at the coin market cap chart for the market cap. Wow, that's a tongue twister for BUSD. We go back to just after FTX. So just after FTX, there was a surge towards BUSD as the safe haven, as Binance kind of came out smelling of roses. And we'll talk about their proof of assets and everything else a little bit later on. But there seems to be a lot more faith in BUSD than in others, such as USDC or Tether USDT. But since that time, we have seen it fall from around about $24 billion to where it currently sits today in around $9.5 billion. So, nearly 60% reduction in the overall market cap. Now, this hasn't just happened because of the regulatory stance that's been taken by the SEC, But we can see that when they announced that this was going to go in effect in the middle of February, we went from 16 billion down to where we are now at 9 billion. Binance themselves, I couldn't find the tweet because Binance tweet a lot, but Binance themselves have announced that they will also monitor the relevance of BUSD. And that's kind of worrying when you think that 95% of all BUSD transactions are taking place on Binance. I was going to say the Binance Smart Chain, but on Binance. So the fact that they're already starting to think about monitoring that does provide a bit of concern. But it's not the only thing that FUD, and sorry, let me just clear that up. The BUSD issue with Paxos is not necessarily Binance FUD, although it could be considered to be just because people are not as well educated as they should be. Binance effectively licensed their name towards a stablecoin which Paxos minted. That's the end of the relationship necessarily. So I am sure that whatever happens with this, and assuming that Binance survived the FUD wars, they will probably license their name to another or a new stablecoin and then take it from there. Sorry, my phone is buzzing. Sorry, nothing important. So what other news have we had for Binance this week? Well, this came out recently, beginning of the week, and it is an interesting article. It's produced by Forbes. It's picked up by a lot of news articles. I've just taken the one that's come from CoinDesk, which notoriously is not a fan of Binance anyway. But it alleged that Binance moved $1.8 billion of a stablecoin to hedge funds last year. Now, it wasn't you moving BUSD. It was moving something called the BPEG USD, which effectively is the Binance version of the USDC token. Now, why is that an issue and why is that such news? Well, there's a couple of things from that. Forbes alleged that they have taken this information from on-chain data, and generally on-chain, the whole beauty behind cryptocurrency is we can't hide behind transactions because everything is on the blockchain, and they've used that information to have a look at where these funds have gone. What they've suggested is that they were moving $1.8 billion worth of this fund to other to other wallets, hedge fund wallets, which was effectively in contradiction to what they were saying, because they were always of the opinion that customer funds were backed one-to-one, whereas this is arguing that actually that collateral that was supposedly used to back this token one-to-one was being moved elsewhere. But two, they were doing something called commingling of funds, which, using client collateral for their own gain for hedge funds. It's not like the customers, the clients of Binance have requested to do that. Now, if that story sounds familiar, it's because that's exactly what FTX did with Alameda Research, and Binance were very quick to criticize them for doing that while defending themselves. Now, the report goes on to explain how they got this information, what it was done, and when it was done. And the period that we're talking about is around about August of last year through to about November. So definitely over the period in which FTX collapsed. What is interesting is CZ very quickly came out, tried to dispel this, completely called it FUD, and went for a fairly decent Twitter thread explaining why this was not the case. And I'm not going to bother going through that right now. But what is interesting is just this one here. Binance holders user funds one-to-one always. That's always been their narrative. And that's quite interesting because we look at the next news article. So I scroll to the top for you all. Binance can't keep its story straight on the misplaced 1.8 billion USDC. So this is a follow-up story that came out yesterday from the original article that was produced on Monday. And obviously in that intervening period, comments have been made by Binance, comments have been made by CZ directly. And what I'm just trying to find who wrote this. The journalist from this is saying is that actually those comments are not aligning with the narrative, and actually they've often changed, and it's causing some confusion. The fact that they can't get their story straight is a little bit of a red flag. If it was a very clear reason as to why something may have happened, then they should be able to just dispel that straight away. Everyone should be on the same page and get out there. And I want to scroll down. I'm not going to bother going through the article. I mean, the first part just recaps what we necessarily all talked about. But we'll go down to here and we'll have a look. Actually, I've just gone straight past where I want it to be. Yeah, so Binance, we're down here. So Binance's various attempts to offer an innocent explanation of Forbes' finding have not provided a unified and consistent, much less entirely compelling justification for what could, in the worst case, indicate the misuse of customer funds, that commingling we talked about. Before publishing a more focused and detailed account Wednesday morning, Binance officials offered a number of differing, even contradictory explanations. Equally galling, Binance's respondents have continued the petulant and defensive tones of many of its previous dismissals of close investigation attention. I mean, definitely the narrative of CZ's tweet was like that. Forbes' investigation was motivated by mounting evidence of past problems with Binance's asset management practices. Binance has admitted to Bloomberg that, for certain periods, it failed to maintain clear one-to-one backing of its wrapped B assets in segregated and transparent manners. Just want to take you back to that point, CZ saying, one-to-one, always. Well, actually, Binance allegedly has admitted that that wasn't necessarily the case. And we did have, I didn't bring up the article, we did have an article coming out, I think it's the beginning of the year, about they had, sent funds from one wallet to another, but they quickly cleared that up. They tried to be very open and honest about that, but they were caught out. Now, is that just an honest one-off mistake, or have they been caught out of something that they've done a lot of times and it hasn't happened? We don't know yet, but I'm sure people will be digging into it for us to find out. In this context, the exchange attempts to, I'm back here now, to paint an act of journalistic analysis as conspiracy theories while suggesting the investigation was motivated by nothing but collecting a lot of views and clicks. It's beneath the dignity of an organization hoping to maintain a leadership position in a high-risk, fraud-riddled industry. And I think that's now the narrative. That's now the point. Getting back to the headwind that we're seeing. Binance is the biggest player out there when it comes to centralized exchanges. And to be fair to them, they have weathered a storm which has been raging for, 3 or 4 months at the moment. But if we start to see that shift, if we start to see that sentiment start to shift, that could be a significant hurdle for the price of BTC, because these guys deal with 65-70% of all centralized exchange transactions. So they are no small player. I'm not going to bother necessarily going through the rest of the article there, but it's just, for me personally, I still use Binance. I don't really keep that much money on it. I just have everything on my Trezor and I send it over as and when I need to use it. That seems to work much better for me. I've just realized I don't have the chat up, so apologies, guys, if people have been trying to chat. Let me just find it. Okay. Yeah, I just move it in and around there. However, if Binance were to go under, then people are going to have to start thinking about, one, where they're going to be buying and selling any of their assets from. But two, I'm sure a vast majority of crypto traders, despite everything that happened in 2022, still leave their funds on an exchange or their crypto on an exchange, which, we're very keen on this channel to cement the fact that you need to keep in a cold storage wallet, away from any centralized exchange and any risk of anyone taking that from you. So yeah, we've got the Binance FUD that seems to be building up. Just a couple of other news stories that have come out this week, which are just helping that narrative. FTX, you can't have a week of news without representing FTX. But now the FTX presentation shows a massive shortfall in the firm's assets. So as we're starting to understand where the financial position of FTX are, the bankrupt crypto exchange FTX revealed a massive shortfall in digital asset and fiat currency holdings, with billions worth of customer fundings missing from both the exchange and its United States-based arm, FTX US. And I just want to say, just what we do, FBF is an idiot. I'm going to choose my words carefully there, because the entire time his narrative was, I can't see why FTX US is closed down, it's fully 100% backed, etc. And he either knew that it wasn't and just lied through his teeth to try and sound better, or he is utterly clueless and did not deserve to be in that role, and he didn't realize how bad a position they were in. Either way is inexcusable, but we'll leave that one there. Now, presentation shows that 2.2 billion in wallet exchange in fiat, of which 700 million or just under dollars worth consisted of most liquid category A assets. I think this is all a bit. I'm trying to find where it is. Yeah, here we go, down at the bottom. In total, FTX recorded an $8.6 billion deficit across all wallets and accounts. So that's how much is missing. $8.6 billion worth, which is unbelievable, really. But that's where we are with that. So unfortunately, it is going to look like this is going to be drawn out, and any creditors are going to be getting pennies on the dollars for whatever they originally invested, which is a pretty sad state of affairs to be for the second largest exchange. But the fallout will continue. We briefly covered it earlier on, and we'll cover it again now. Mt. Gox. So Mt. Gox found some BTC. It's gone through a lengthy process. They've done, over the last 6 months, an opportunity for the creditors to determine how they want it to be paid. Well, we're finally in March, and from the 10th of March onwards, payments will start to be made. That can either be paid out in crypto, whether that be BTC, Bitcoin Cash, I can't think if there's anything else, or it can be paid out in USD. So we're still a wait to see, but it's about 130,000 BTC, I think it is. No guarantee that it's all going to flood onto the market straight away. It's a 6-month period in which it's going to be paid out. And also, we don't know that people are going to look to sell it. You've got to remember, the time Mt. Gox went under in 2013, 2014, BTC was significantly lower than it is. People may be happy to hold on to it, waiting for further highs. Then again, people may just be ready to move on with that. So something more headwind that may cause us a problem. And speaking of fresh opportunity for assets to flow back onto the market, we've got the Shanghai upgrade, or the Shanghai hard fork for the Ethereum. So now that Ethereum's moved to proof of stake, a couple of things they were looking to address with that. One was the price of transaction fees and gas fees, which they haven't resolved yet. That's to come later. But the other one was the ability to unstake Ethereum that had been held, and by all extents, an incredibly long time for some people. So back end of last month, they started doing a beta testing, the unstaking of Ethereum. That was then due to complete at the end of February, and then it would roll out into March that we would have the Shanghai hard fork. Two things from this. One, it now actually looks like this is going to be pushed back to April, so already missed the deadlines. May not be a big thing, but just for any of you that are waiting for that, just to know it's probably going to move back by 2 weeks. But secondly, we also have to now consider what people are going to do with the Ethereum once they can unstake it. And again, there's two sides to this. I mean, we're talking about people who staked their Ethereum 2-3 years ago. Price of Ethereum was down as low as $85 at the time. Now, doesn't necessarily mean that the moment it comes to be unstaked, everyone's going to unstake it and look to take some profits. But given where we are, given where people may be personally within their finances, it wouldn't surprise me to see at least some of that sold. And then it's a case of supply and demand. If there's too much supply in the market to meet the demand, the price is naturally going to fall. So we just need to bear that in mind as well. I think that is all of the news I was just going to cover there. I just want to, so we talked about Silvergate, we've talked about Binance, we've talked about Mt. Gox, and we've also talked about Ethereum. I mentioned right at the beginning of the introduction that we've also got to take into account the global macroeconomic position. And there's definitely two camps within this at the moment. But I'll be honest with you, I'm sitting on the more pessimistic side of things. Yes, inflation has been coming down. I mean, it was a ridiculous level in July last year, over 9%. And it's great to see that we're down around about 6% at the moment. But we've still got over 50% to get further to go to reach the level that the Fed want to do and achieve 2%. And interest rates at the moment are looking like we've only got a few more increases still to go. And if that's the case, it's going to take a significant amount of time for us to bring that down. We are still battling with the US government on the definition of recession. And so we're not officially in one yet, but we are starting to see major banks suggesting that by Q3, we will officially be in a recession, meeting the criteria of the new definition. Whether or not they change that definition, we'll have to wait and see. But we're also now starting to see that the inflation's starting to become sticky. It's no longer continuing to fall. Last CPI data actually showed that we increased slightly. we've got a very hot job market at the moment, and unemployment is not climbing as much as the Fed would like to meet the narrative of their disinflationary period, bringing everything down. That means we've got some difficult decisions that need to be made. Probably, if not discussed significantly, actually made at the next FOMC meeting, which is towards the end of this month. Before that, we do have some more CPI data in a couple of weeks' time, which I'm sure is going to help Chairman Powell make his decision. But for me, we're either going to see more increases. Doesn't necessarily mean that we're going to see, a 75 basis points in March or anything. We may just stick to somewhere between 25 and 50, but do a couple more of those, maybe taking us closer to an overall 6% interest rate. That just needs to be explored. But it doesn't paint a particularly good picture on the markets at the moment. If we just have a look at some of the markets, so the S&P 500, clearly continue its downtrend. Yes, it had a good start to 2023, but that's been a rejection. We're starting to come back down at the moment. NASDAQ, similar kind of position, just melting away from a good start into the year. Bit of a double top there and falling away back down. The dollar's doing a bit of a reverse at the moment. It's sort of, I don't know, consolidating in and around this level. So I'm just going to put it onto the Dixie because that's just one I use more. Round about the 105 level. We break that. 107, I think, is definitely on the cards, maybe even 109. And to get to that high there, we're certainly going to see that impact on the market. I'm not necessarily going to go through all of the Fandang stocks, but the only one that seems to have done anything decent recently has been Tesla. And even that started to stall at the moment. So gold, again, as a store of value, had a great end to 2022. We're seeing that correction, potentially that bounce in and around that $1,800 level, and something to have a look at. But for me, the overall picture at the moment is not one in which we're going to see a positive return, an immediate positive return to the markets, risk back on, and away we go. I think we've got two options. We're either going to have a very dull 2023 with just a choppiness and a drawn out market, or unfortunately a bit more exciting but maybe more nerve-wracking, we're going to see some significant falling as the recession and the economy really start to take hold, and then the impact that's going to have on the crypto markets will be, in my opinion, exactly the same. I don't see crypto being that escape from inflation, escape from the downtrends of the economy that people hoped it had been back in 2020. And so, that's unfortunately where it is. But let's go back onto BTC. Let's have a look at some timeframes and just see where the price potentially sits. So I'm just going to move on to this chart here. So this is where we are on the daily. And I think there's a couple of things to have a look at on the daily. We'll break it down a bit lower. So I just want to see where we are in terms of trend line. So I've been looking at what was this one originally, which had worked out quite nicely from the beginning of the year, came back down, kissed off, it bounced back. And what we had here a couple of days ago, or it was a week ago, was a bit of a fight in and around here. We've broken from that. We've come back up, retested it. We've been rejected today, and we're coming back down. So for me, that's certainly one that I want to have a look at. Another one which is a bit more longer term, it's probably this one here. Just draw it there. Now this looks messy, but actually just bear with me here. So we had that retest from it over the summer, so that June low, came back around about September. We tested it. I mean, I probably could draw that a little bit neater so that it hits properly. But you can see, bounced back off it quite strong, came back down. It was just ping-ponging in and around this, acting like a bit of a magnet. We lost it, rejected from it, came back through. Then it found it as a bit of resistance breaking back through, then a bit of support, and now this is where we are at the moment. So there definitely seems to be some level of interaction in and around that trend line. Definitely worth a watch as well. We're right on it today to see where that might take us. I'm just going to get rid of it now, because what we probably want to do is have a look at some lateral price action. And I'm just trying to have a look at areas of price support. We'll throw out some Fibonacci's in a moment, but just where I might find a bit of a bounce. Our best chance at the moment is 22,000. Now, we almost hit it today, but we didn't quite. We bounced just slightly above it. But there has been some history of price action over the last sort of 6 to 8 months in and around that level. Unfortunately, we lose that. Well, we've got a little bit down here. So I should have duplicated it, but I didn't. So, another $1,000 away or so, potentially at 21,000. We got the psychological level at 20,000. But really, for me, I think if we start to lose the 22K level, we're probably going to see an initial, maybe just be a spike below the 20,000, try and bounce off this confluence of previous price history. Confluence probably wasn't the right word there. And then a look for a recovery. And then failing that, well, there's not really much further it can go without having to retest the bottom. So the fact that we've broken this trend line is an area of concern. For those that are wanting to, try and remain a little bit bullish, what I would say is at the moment, we haven't actually had a break in trend. So we had that nice double bottom formation and break back up. What did that help us cause? Well, we had down here, I suppose, is the first one, wasn't it? That was our low. Then we had a higher high, higher than this one, then a higher low, and another higher high. And we haven't actually closed below this level here for it to break that trend. So at the moment, that bullish narrative is still there. And anyone that's looking to trade that, just bear that in mind of where that might go and what that might do. For me at the moment, I'm not actually necessarily trading each way. Just go back to high block if it's loaded. I think that's what we were going to do. Is we're going to have a look at trying to have some understanding of some of the levels. Well, let's just take the two biggest levels here. So we've got 24,000 and we've got 21,150. Let's go back to the charts now. We really want to be drawing wrong chart. Want to be drawing some stuff on there and have a look to see what that might tie into. So 21,150 is around about that level, which is a level we actually identified before. It's potential bounce. We know that there is long liquidations down at that level, and then the 24,000 level, which is just about there, which again is kind of effectively a retest of these here. Now, it can certainly look to head back up there. We would actually, depends what it do in and around there, but if for a turnaround here, would certainly form that further lower high, higher low, get that the right way around. But if it then failed there, we would have confirmed that we didn't make a new higher high, which could see a reversal to the trend that we've seen so far. So in terms of where we are, we're kind of flat in the middle at the moment. I'm not necessarily feeling a need to necessarily trade this. I think I'm just going to watch those two levels, see where price goes, and then, take it from there. Okay. That's it for me, really. I took a lot longer than I had hoped it would do, but I think there's a lot to unpack there. Hopefully you got something from that. As I say, I'm going to continue to do these each week. I think they'll obviously get slicker, and I won't be late like I was this time. But if you did like this, or you want some more of this, please just hit the subscribe button. You'll get a notification for whenever I am going live. We'll try and sort of spice it up between, as I say, news and price action versus token research, because it is a good time to be starting to look about how you're going to build your portfolio. I did recently just do one on Moonbeam, so feel free to check that one out on the channel. And other than that, I just want to say thank you very much and hope you enjoy the rest of your day. See you all later now. Cheers.